note that information, advice, or guidance that you take from this video, along with analysis and predictions of the market, is not expert advice. Thus, you use and apply it at your own risk. We are not financial experts who deem themselves authorized financial advisors. We are only sharing content based on what we know and understand of the financial markets. Should you take this information and use it, and therefore find yourself in a position whereby you lose money when trading, we are not at fault. You are not to use this information as a final conclusion of whether you should buy or sell whatever instrument we are analyzing based on this video, but as trading insights, ideas that give clues of what the market is expected to do. We also expect you to do your own due diligence of analyzing the market fully and take profitable trading decisions before you invest your hard-earned money into the market. Greetings once again, guys. Welcome to this week's weekly analysis, and in this video we are going to be doing both fundamental and technical analysis. My name is Siandam and I'm South African, and I'm a trader and I've been trading for a few years now. Welcome once again into this video, and as much as I am going to be sharing this week's weekly analysis, I want to bring it directly to your attention that no matter what happens, please do not forget to subscribe to this channel. Of course, it's a new channel. We are now sharing market analysis that helps anyone who's a trader, both new and experienced, who actually needs a clear, simple focus on what to expect in the market. This video will give you all of that insight. Now, without any further ado, let's get right into it. Now, this week, definitely we are going to be starting off with fundamental analysis, and as we look at what is going to be happening this week, we are looking at the consumer price index, which measures or gives us information concerning the spending or the consumer spending in the US market. By definition, it simply means the core consumer price index measures the changes in the price of goods and services, excluding food and energy. Excluding food and energy, the CPI measures the price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. Right now, in most cases, if you want to gauge a clear direction of what the CPI is really all about, you also need to check interest rates. Right, this actually means we most likely get to listen to speeches, just like as you can see on Wednesday when these news are going to be released. There is going to be a speech from Fed Chair Powell. Right, in most cases the Fed are the one that actually decide interest rate. They're the one who actually control inflation, and because they're the ones who control inflation, in order to have an idea of what is going to happen on Wednesday, we are going to be checking or listening to the speech of Fed Chair Powell on Tuesday, directly at 20 minutes past 6 according to South African time. You can actually check your time zone based on your country. You can actually change it here, and then you will know at what time will he be speaking. But in South African time, he will be speaking exactly at 20 minutes past 6 in the evening. And for that, in order to be able to gauge market direction in terms of how the market is going to be moving on Wednesday, we are going to be listening to that speech and then be able to get ideas. Right now, going into Thursday, we are expecting initial jobless claims, another key indicator for news that are which are going to be released on Friday. Right now, majority of the time, if you've been following my videos, you will actually know that in most cases I always share that initial jobless claims give us a clear idea of what the US economy or how the US itself in terms of employment creation, right, is able to create jobs. Now, what this simply means is initial jobless claims are the number of people that are claiming to be jobless, right? And of course, if you don't know what that means, by definition, majority of the time, initial jobless claims measure the number of individuals who filed for unemployment in insurance for the first time during the past week. This is the earliest US economic data, but the market impact varies from week to week, right? Now, what this means is the more people file for unemployment insurance, that basically means that there are more people who are jobless. So these people in the US are getting insurance in order to be able to survive, right? So if it is higher than expected, that means that there are lesser jobs created because there are more unemployed people, right? Now, if it is lesser than expected, which is good news for the US market, it means they have created more jobs. And now this is why this becomes a key indicator to the non-farm payrolls, which basically tells us the number of jobs that have been created, it is the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity, right? At the very same time, if we want to, or let me just put it in this manner, when we look at Friday, which is this week, in terms of NFP, right, we also look at the CPI. The CPI also tells us if there is a higher rate of inflation. That actually tells us that there's more money in the market. That means there are more people who actually have jobs because there are more people spending now. And that tells us that on Friday, we should expect that the non-farm payrolls should be positive because there are more jobs created, and proof that there are more jobs created is simply because there is money being spent, and that causes inflation, because when people are spending money, it also causes an increase in the cost of goods and services within a country, right? So now going back to the economic calendar, we can definitely conclude that by what we find from CPI and definitely what we find from initial jobless claims, we have clear information and data of what is going to be happening on Friday. So this week, as a trader, if you want to trade and be profitable, look at these things that which I've outlined in the past few minutes. Look at core CPI, look at initial jobless claims, and you will know what's going to happen in terms of NFP on Friday. Now, if I were to give you advice on what to really trade, focus more on trading with a lot of volatility starting from Wednesday, right? CPI and NFP most likely move the market massively, right? So majority of the time, expect the market to move massively on Wednesday and definitely once again on Friday. On Thursday, whenever initial jobless claims are released, the market does move, but not as such, right? But of course, do expect that volatility and some activity depending on the pair that you are trading, for example, gold, right? So that's it from me when it comes to fundamental analysis. Let's head to technical analysis. Coming to technical analysis, as usual, I always draw my trend lines and keep them as they are because I know it takes long for the market to actually get to touch them, right? But of course, we are anticipating the market to move as we analyze, and definitely the market has moved as we actually anticipate. As far as I've seen, or as far as I have come to realize and analyze, if you remember my videos in the past few weeks, especially coming from August to September, I did outline where the market was going to go in terms of US30, and in the weekly chart, as you can see, the market definitely was in an uptrend for a very long time. Let me say for more than half of the year, basically, right? The market was definitely in an uptrend, starting definitely in April. It's been on an upward move all throughout. So definitely, if of course you bought somewhere here and held up there, if you're an investor in trading, you are definitely swimming in massive profit right now. And I'm sure by now most of them definitely must have closed off their profit, because the market this past week on Friday shot straight down. As you can see over there, there is a massive spike going down. That is a signal of massive investments taken out of the market, and that shows that people who have been buying long term definitely took out a lot of money out of the market. Now, as anticipated, right, I will say this, it is not a surprise because at the time of recording this video, the market is already open, right? And because the market is already open, the market has opened quite higher than anticipated. Why? Because on Friday it closed lower at this strong support level right here. What this tells me, or what this gave me as confidence, is no matter what happens, right, the market definitely is going to open higher because it definitely closed off at a point, or it bounced off at a point that is a strong level in the market. Now, this is the very same support level that I spoke about, right, and outlined in those past few weeks, and gave this to you guys as one of the most important levels of this particular instrument in the market. Right now, of course, drawing a trend line going through, I see a pattern over there that we can actually that gives us a connection of that particular trend line. Remember, trend lines are by far the simplest ways in which you can find market direction. Now, of course, many other ways, definitely we do use market structure, but directionally, if you just want to know the direction of a market that you are analyzing, definitely go for trend lines. I know certain people have improved their trading and they classify certain ways of trading as a sophisticated, thus they actually look at trend lines as instruments that are no longer worth recognizing anymore, because according to them, they are too simple. There are advanced methods of trading, and I just want to tell this unto you that do not let anyone lie to you. Trading is not about how fancy your analysis is. Trading is not about really making money. And how you analyze the market is basically your strategy. How you analyze the market is a determining factor of what you know and the knowledge that you carry. But the goal, or the main question to ask, is, does it work? And if yes, great. That is all we are looking for. All we want is something that can be able to make us money. Now, definitely looking at the US30, as you can see, for the past few weeks, and looking definitely at last week. Last week was an upward move type of a week. Okay, wait, not last week, rather I'm looking at this based on the monthly. Let me say last month. Yes, last month, from the beginning of September going to the end of September, I see 20,000 pips over there. The market moved massively to the upside. So definitely, if you are trading to the upside, let's say most likely you bought from this level going straight up, you definitely would have made a lot of money, because the scaling up of buying levels here was really quite so many. So there were many opportunities that were affording traders, or that were affording us as traders to be able to enter. Now, definitely the market was so clear, or what a simple way to actually see where the market was going. Like I said, guys, don't let anyone fool you. Trend lines are the simplest way to gauge market direction, right? Because if you can see here, there are basically simply just 3 touches that could have given you a heads up of last week's market direction, right? Because the end of the last week of September, which was an upward moving week, right? The market was trending to the upside, and of course that was a week full of buys. Literally from that rejection over there, the market fell, and that same rejection marks a strong resistance level based on that trend line that we draw on the weekly, right? So that tells us that that basically tells us that at such a level we should expect to sell, and anyone who sold off over there, guys, made definitely a whole lot of money, because the market moved massively than it ever did in all of those past few weeks, in basically just 1 week, and much more even in 1 day, which was Friday, right? So if you look at that coming down here, you are definitely looking at the very same 20,000 pips, which was accomplished in a space of 4 weeks, month rather, all fulfilled back or all taken out in 1 day, in 1 week rather. So now, what are we expecting the market to do this week? Now, there are only one of two things that are most likely to happen, of which the probability in this case might be to the downside. And I will tell you why, right? The market has been trending to the upside for a very long time. So now when the market has moved to the upside for a very long time, it is to our expectation that the market should temporarily retrace. Yes, it is going up overall. The markets are gaining in value. Everything is growing. Everything is increasing. But as much as you can see the market having moved upside for all of this long, it is our anticipation that the market is definitely going to go down. Even much more because the market has broken off this level over here. This is a strong level trend line, if I must tell you, right? It's on the daily chart. The market has respected it for a very long time, and this time it has broken it. So we can anticipate that the market definitely should be coming up to this particular level. Of course, as a retracement, as I said earlier on, that the market closed off at this bottom level, and for that particular reason, it bounced and it opened higher, right? And having opened higher, of course, it's retracing most likely, and it will definitely reject up here and come back down. So that is the kind of a week I'm looking at, right? I'm expecting that the market will go up to retrace and reject up there and fall back down. However, it is still possible for the market to continue to the upside because majorly the bigger trend at this point is to the upside. We are, however, expecting that the market should be going down simply just because there is a clear change in direction and in major time frames, right? There's a clear change in direction, and that gives us a clear anticipation of where the market is going to go. Now, of course, in this video, I'm not covering day-to-day entries. I'm only sharing directional information that can give you an idea of what to expect this week as you are trading. And because you know what to expect, you know how to or what to expect on a day-to-day basis. But like I said, expect an A-type setup where the market moves up and then from there rejects and comes back down. It's a very clear and a very simple week. Of course, like I said, it is something that we should always know and never forget when it comes to our trading, right? We should never ever forget that what we may anticipate to happen in a long time may happen shorter. What we may anticipate to happen in a shorter time, the market may also take time at the very same time, right? So now what that basically means is we are anticipating that the market should move to this upside. Now that is basically what I'm expecting on a day like today, which is a Monday, right? So however, we do not control the market, right? The market tells us what to do, and all we do is simply just follow. Right? So now, like I said, structure has been broken straight from the first day of last week, right? The market broke structure. That is a clear change of character over there. The market has been retesting these levels, and of course, if you were trading daily, you could have sold off on any of these levels and still made money. And of course, Friday, definitely that would have been your jackpot into massive profit. But of course, when I look at this week, definitely I am anticipating that even in the next few weeks, let me basically say for all of October, I'm expecting that the market will definitely be falling, right? Will definitely be falling. If not falling, most likely consolidating in these highs, but most likely fall at some point because it's been on massive uptrends. Going to NASDAQ, basically we are expecting the very same thing, right? However, here the trend was clearly established through two trend lines, which I have already drawn. As you can see, everything has already been set up, right? As you look at that, you can clearly tell and agree with me definitely that more than anything, it was a clear trade on Friday. Oh, that was really a wonderful trade worth taking, and that could have definitely, or that I am sure everyone who traded on Friday definitely made a lot of money. Well, of course, if you traded in the right direction, because if not, I'm sure you blew your account. right? But either way, because the market has fallen and the market has now opened and it has opened higher, we can anticipate the market to come back up here to retest these levels and also of course come back down. Now at this point, we are only going to wait for the market to tell us what to do, right? Because over here at this level we have, according to my analysis, I have over here a strong resistance trend line, which is acting as a strong support trend line at this point because it has been broken. So it is a strong support level that I am expecting and looking that even if the market is to come back down, it definitely most likely must respect. So when it comes to NASDAQ, because when it comes to NASDAQ, it's quite very much similar to US30, right? And at this point, it's literally in the middle of this particular channel that we have drawn over here. So our anticipation basically is that the market is definitely going to tell us what direction it is intending to take, and of course it is going to give us clear clarity on that. So all we are going to be doing, just like I said, at this point I am anticipating the market to fall. It's been on the rise for a very long time, but even if it is to rise, it has already bounced off of this strong support level over here. So because it has already bounced here and opened higher, which is in the middle of that particular move starting off from Friday, then we can anticipate the market to either move up or down at this point. So I would simply say proceed with caution, observe what the market is doing, let the market give you clear clarity of what it is doing. But of course, if it comes back down, breaks this trend line or this strong support level, then we are of course expecting more sales, right? Of which, when that happens, that would mean that we have already seen confirmations up here, such as change of character and all of those kind of things, because of course change of character has already started and been confirmed up here. So we should be expecting a retracement and continuous moves to the downside, right? But of course, if the market is not going down, definitely we're still going to be looking for buys, because more than anything, the market is still in a strong uptrend. This was basically a retracement as anticipated of how the market should move. Going up to gold, of course, gold has definitely been dishing out buys upon buys. It's definitely been making people a whole lot of money, and oh my god, anyone who bought at this particular level down here, even I myself definitely envy them, because at this particular moment the market has moved massively, right? And 7,500 pips on gold, you definitely know that is really and massively a lot of money, right? Now, without any further ado, let's get right into gold and look a little bit deeper into how gold has been moving for the past few weeks. As you can see, of course, starting from down there, I mistakenly deleted a trend line that was crucial for market direction over there. It's fine, I will definitely draw it back. The most important part, or the most crucial part either way, is the fact that it's already clear as to where gold is going, right? Because either way, despite these trend lines, gold is up there. So our major focus when it comes to trading and what we would expect gold to do is definitely based on quite a lower time frame. But as it is, guys, more than anything, gold is basically just buying, right? Gold is just buying on a day-to-day basis, and the only thing that I can tell you to look out for this week is keep on focusing a lot on market structure, right? Gold has good opportunities for buying and selling. All you need to do is just to look at the main structures of the market, right? However, if I must actually bring it to your attention, gold has already also changed character and fallen down, even though it also changed character and went up. So we are to check how it is going to be behaving right? Because as much as it has changed character and went up as it did going down, that tells us that it is actually still on the lookout to move to the upside. So like I said, just keep on much more observing a lot of market structure and check how the market in terms of market structure is moving. If there is a change of character, expect sells. If there's a change of character, if there are breaks of structures to the upside, just keep on buying, right? Buy on every retracement and don't stop until you see a change of character, right? So I would love to actually say a lot, but the markets have been so simple and so clear because they have been maintaining one direction for the past few weeks until Friday, of course, when we're talking about US30 and NASDAQ 100, right? But more than anything besides that, the gold itself has been maintaining one direction, moving straight to the upside and offering nothing but buys. Even as I can see over there, I'm seeing a trend line that is actually connecting those 4 levels over there, and that even makes it quite more simpler for us to be able to trade it and know what to expect and anticipate in terms of what direction gold is intending to take, rather. So yeah, I guess if I can put it like that, if you could have bought here once again, bought them massively and still bought there overall once again and kept on taking profit just like that, right? So but either way, more than anything, that's basically it. I don't really have a lot to say this week. All I can say is, specifically if I'm talking about gold, is just be on the lookout and invest more of your time focusing on market structure. That's it. Market structure will tell you what the market is basically doing, right? And of course, I would say the news, because the news definitely do affect gold a lot, especially US news. So be on the lookout for that as well. Do not trade ignorantly of news. Make sure that you keep observation of them and how they are moving, and more than anything, you will definitely be able to make profit. So yeah, that's basically what I'm expecting of gold. I'm not sure if I can say with this trend line the gold is actually going up there, but that is definitely possible, right? Because there's a change of character over here. If I can still talk about trading this based on market structure, of course, there's a change of character over there. We tested clearly on Friday. If you're trading this, you definitely would have just bought. You definitely would have just bought, maybe from down here if you spotted that, but if not, at a later time, which in South African time that was 7, if not 8, if not 9, then yeah, that would have given you a close off to the day in profit, and of course an opening into the week in profit still, rather, because the market opened and it opened shooting straight to the upside. So yeah, this week that's basically what we're anticipating. I can anticipate gold to continue to the upside. It's been moving to the upside, guys. So for now, let's just keep on rocking with the trend until the trend changes. But I'm definitely sure that the day and the time when it's going to change, it's going to be one hell of a day, because the sell-offs are going to be massive. And yeah, let's be in anticipation of that and trade and keep up with the flow, as they say, the trend is your friend. So yeah, let's do that, guys. So more than anything, that's all I really have to say. So a quick recap this week in terms of fundamental news: we're expecting CPI news, non-jobless claims, and definitely none from payrolls to get clues in terms of what's going to be happening rather in terms of the consumer price index, which is the CPI. We are going to be listening to the Fed's speech on Tuesday at 20:06, and definitely we are going to be checking initial jobless claims in order to be able to have an idea of what's happening on Friday. And of course, technically, we are expecting a sell-off based on US30 and NASDAQ, because the market has already changed direction. But of course, because the market has still been on an uptrend, we are not ignorant of the fact that the market can move to the upside. And likewise with gold as well. Gold has definitely been giving us buys, so we are focusing on buys until the direction of the market changes otherwise. So thank you so much for that. So thank you so much for joining me in this video, guys. Thank you so much, and don't forget to like, comment, subscribe if you have any question, of course, but definitely do subscribe, because I'm going to be definitely dropping lessons and more analysis in this particular channel. And yeah, you are welcome at any given time to be asking me questions. Definitely my contact details are gonna be attached on the description of this video, and all the information that you need in terms of talking to me about anything, you can find it